Socials started. Hello, Smart Ministry Podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with Phil Weiss. Hey, Phil.
Hey, Kirk. How are you?
Doing well. Doing well. Just having a post Father's Day hangover. How was your Father's Day?
So I will tell you that my Father's Day got postponed until next week
Oh,
because my wife has an aunt who lived in Toronto who passed away, and her family decided that this past weekend was the weekend to do a celebration of her life. So we drove up so she and I went to Toronto and we talked to all our kids and said, we're just going to change the calendar this year and we're going to celebrate Father's Day next week.
nice, nice. Yeah, I've noticed people are doing a lot more celebrations of life instead of funerals. They're calling it celebrations of life, which I think is great. I mean, I think
Yeah.
that's the way it should be. I do find it interesting how we as a culture really don't have a way to grieve, right?
Yeah.
You look at other cultures, other times, even like way back, people had these weird processes, but it was a process for grief, and we as a culture just don't know how to grieve, which causes a lot of problems when it comes to families,
Yeah.
when it comes to money, right? I mean, you and I deal with this all the time, but it's I always I always tell people, look, every time someone's ever died, someone thinks there's gold buried in the basement, and someone else took it. Every single time. Every single. I'm sorry, one time it didn't happen. One time. Um, and but realistically, it just doesn't happen because everyone's fighting over something. And the funny thing is, it's never the gold. It's always something else that came from childhood. This misplaced grief, this misplaced problem that you've got. You when I was younger, you used to beat on me. Okay, well, that was 50 years ago. Who cares?
Right.
But the problem is this is how people deal with grief, right? Is they attack each other, which
Yeah.
is sad, but it happens too frequently, and I'm not sure really how much you can do about it. But it is a problem. And it's something people should be aware of. And you think, oh, that'll never happen to me. It does. It happens to everybody. Virtually everybody. And so just anyway. But I do like the idea of celebration of life.
Yeah.
I think it's
I will
great.
tell you one thing that I thought was really cool. So when she passed away, it was in March, and we were in Ireland. And my wife's aunt had always wanted to go to Ireland and had never gone. And so in the Jewish religion, when you go visit the cemetery, you put a stone on the headstone or rock on the headstone to show that you were there because it lasts instead of flowers and all that. So because this happened, my wife had a rock that had like a little bit of shine or glisten to it that she picked up in Ireland. And when we went to the gravesite yesterday before we came home, she put the stone on the headstone because it was like bringing Ireland to her aunts, and she never actually made it. And I just thought that was a nice little touch.
Nice. That's interesting. I never know that. I
Yeah.
didn't realize that's why people put stones on top of the on top of the headstones. Interesting.
Yeah.
Although I have driven by Jewish cemeteries and I haven't seen a lot of stones there. Does everyone do that?
I don't know. I mean, it may only be certain parts of Judaism that do that because I don't know that I remember it from when I was growing up. And my wife's family is from the Middle East, so they're Sephardic Jews, and my family is from Europe, so we're Ashkenazi Jews. And it might be that it's a Sephardic custom because I don't remember doing it when we were kids. So it's possible that it's a Sephardic custom. That I can't say for sure, but that could be why.
Interesting. Yeah, I know there was a cemetery near my town growing up, and then there were two blocks. One went north to south, one went east to west. And I don't know which one was which, but I know one of them was a Jewish cemetery, and it was I don't remember stones on the headstones, but of course I wasn't looking too closely, so I could be wrong. But
Yeah.
anyway, interesting though. Interesting. Well, what we're entering the summer months where things are not as exciting, not as many things going on as we've been talking about for the last few weeks. Our words of the summer are patience and caution, for good reason. the markets have gone up quite a bit, but actually in the past, um, pretty much since mid-May, so about a month, the markets have been basically going sideways. They've been going up and down a lot, but they're basically sideways for the past month, um, which is timely for what we've been saying: patience and caution. Hard to say whether that's going to continue, but the technicals of the market show that it's strong possibility that this is a continuation pattern, that it's working off the energy of the markets going up so fast, and eventually it'll start to take off higher. At the moment, I'm still in the patience and cautious camp. I don't think it's worth probabilistically taking big bets right now. I think if you're going to invest, you invest small, aim small, miss small. But there are times to be a pig, and now is not one of them. So, based on some other people, they think it's 75% chance we're going to go higher and 25 lower. But at the moment, we're just going sideways until the market figures it out. We are still in a weird market where for the most part, the technology is where the gains are, and at least last week. But we didn't have a chance to chat since SpaceX went public, Bill. What do you think of SpaceX?
What do I think?
Yeah.
Well, I think it's an interesting company, right? I mean, it does have potential, but it's really hard for me to step in and buy shares of SpaceX right now because this at the IPO price, I believe it was trading at like 100 times sales. When I looked at the S1 and it talked about like the potential market being like bigger than the existing market that's out there today, it's like it's really hard for me. And like people get excited and they hear about IPOs and like there's been companies that have done really well, but they didn't come public with a $1.8 trillion market cap. So much of the growth has already happened. I mean, if you look at what's Nvidia trading at 5.5 trillion, something like that, and that's the biggest company, and so it's 3 times, but that's 3 times from where SpaceX is going public. And like, I have a client that her father bought shares of Apple 3 days after the IPO, and the cost basis in those shares, which have been held since that, my client's mother passed, and they still own those shares, it's 14 cents because Apple went public. I don't know the exact number, but I would guess it was somewhere in the $50 to $100 million range. So you had all those multiples of growth that have happened over time that you've already seen happen before SpaceX went public. So it's just really hard for me to say, I'm going to take a position. I have had clients ask about it, and I tell them, I'm going to be honest with you, I don't think it's worth the number that they're putting on it, but it's their money, it's not mine. And if somebody says, I want to take a small position, I can't tell them no. But if I'm making the decision solely, then I don't think it's something that I want to be in right
now. Yeah, it's interesting. I'm always fascinated by the psychology of investors. We both, Phil and I, have a lot of clients, and we work with a lot of different kinds of people. And I was talking to somebody this weekend, and they said, "Hey, I bought some shares of SpaceX." I was like, "Really?" I'm like, "Well, it's for my fund account." I'm like, "I hope so." I wouldn't touch that. I don't know anybody I don't know anybody professionally, like in the institutional world or advisors or whatever, that's buying SpaceX. I'm not saying it's not a good company. I'm not saying that you shouldn't buy it. None of that. I'm just saying I wouldn't do it, and no one I know would do it. And it has nothing to do with the quality of the company. It has to do with the price. Right? We talk about this in the show a lot. There are no good or bad stocks. There are only good or bad prices. So if you pick a company, I will find a price. The price might be a penny, but there's a price for everything, right? And if the company's bankrupt, there are assets. So there's a value to it somewhere. So all these companies have a price. It just may not be today's price. It may be a lot lower. I mean, look at the NASDAQ of, if you looked at January of 2000 until it was around March, I think it was March of 2020, of 2003, the Nasdaq was down like 83%. Technology stocks, big technology stocks down 83%. I mean, that's crazy to think about. But given today's prices, that's actually maybe not enough.
Right.
you know, I mean, if you want to get cheap, that's not enough. I mean, you got these really high PEs of SpaceX and some other companies, not just them. I have to go through the list, but a bunch of the tech companies are really expensive. And it has nothing to do with where they're going to go. They could keep going higher for years, right? And this is, I think, where people struggle to square the circle is, when we say it's expensive, yeah, and it can stay expensive for a long time. It has. I would say for over 10 years, it stayed expensive. So there's nothing wrong with it being expensive, but it just brings some caution that you have to understand what you're doing. You can't just be a pig about it. I mean, if I wanted to buy stocks, and I forget the exact year, was it 74 maybe, or 78? I don't know. But in the mid to late 70s, um, the stock market was as cheap as it's been in the last 100 and some odd years. And I think I don't know what the PE was, but based on some of the metrics, it was the cheapest it's ever been. And that would have been the time to buy. And no one wanted to touch stocks. I think there was an article, a magazine cover, The Death of Equities. But that was the time to buy. Nobody wanted to touch equities. It's like, oh, this is terrible. Bonds are going up in yield, going down in price. Equities are going down in price. Everything was in the toilet. But yet that was the best time to buy equities because it was cheap. If you think of Warren Buffett's success, a lot came from him buying it at the right time. Those who are not, throwing themselves at Warren Buffett, but just logically saying, hey, good and bad, know that in the last 20 years, he has not had much success at all. He's actually done very poorly in the last 20 years. Not to say that he's not smart, just saying that, some of the timing has something to do with success. Now, other people at that time didn't do as well as he did. So I'm still giving him credit. I'm just saying that I think people have to understand, like, he's not imperfect and he hasn't made a lot of mistakes since, the turn of the millennia. A lot of mistakes. He went from, cash light, cash vision businesses to cash heavy, capital intensive businesses, buying railroads. I mean, who buys a railroad? I mean, he always used to hate airline stocks. Why don't you just go out and buy a bunch of airline stocks? Like, that's basically the kind of errors he's been making. So, all that being said, he's made some errors, and maybe there's reasons for it, but we don't know. But the point is when you're seeing companies like SpaceX at this price, it could very well keep going higher. We don't know. We shared last week a bunch of tech stocks when they went public and what they did. Most of them around the 6-month mark took a plunge. I would happily if you look at the 6-month marker, you're looking at right around the end of December, right? I would very happily just wait till the end of the year, see what happens. You might see year-end tax loss selling, depending on where the stock is, and be a good time to jump in if SpaceX starts to bottom out there. But I wouldn't be overly eager to jump into the market. I just think in the summer months, you've got a few other IPOs coming out. SpaceX, never bet against Elon Musk, but doesn't mean you have to bet for him. So, there's 3 decisions: for, against, and just sit in the sidelines and watch. And that's okay for a decision. What are your thoughts, Bill?
I agree with what you're saying. You're right. Every stock has a price, but it doesn't have to be today's price. And you talked a little bit before about the idea that right now, the market, it may be a good time to stand aside with it. They're all saying sell in May and go away, right? Because historically, that May to September, October period is not a good period. Usually, it's May to September. It kind of leads out the summer months. It's usually not a good period for the markets. But if you're a long-term investor, maybe that doesn't matter as much. The other thing, I was listening to a podcast this morning, so exercising, and Morgan Housel was talking about his podcast now. He does like Q&A from listeners, and somebody asked him the market right now, the PE is over 23, the S&P's PE. And if you look historically, the market, when it's got a PE of over 23, its return over the next 10 years is 2% on the high end and a loss on the low end. That doesn't mean that that's what's going to happen this time. We never know, right? It could be different this time. We don't know. It could be the same, but it's not an ideal time to put new money into the market. But when you talk about SpaceX and the fact that a stock that may seem overpriced to keep going higher, that's a reason why it's really dangerous to short stocks. Because when you short a stock, you have unlimited downside, right? Because that stock, like if you buy a stock, you know what your downside is. You buy it at whatever price and it can go to zero and you lose 100% of your money. But when you short a stock, it could go up multiple times and you can really lose a lot. And that's why if you consider shorting, you don't want to, like most people, I would say, don't want to touch the stocks that move. I'm not going to give a specific example, but the stocks that move a lot, that have appreciated a lot, because they could keep going higher. Yes, they might be overpriced, but we don't know when the market is going to decide that now's the time. It could be that earnings growth slows or sales growth slows or they have a change in management or something else happens that could be a catalyst. But we don't know when that's going to happen, and they can continue to defy expectations for a long time. It's like the market can stay solvent. I mean, can continue going up longer than you can stay solvent. I know I'm butchering the saying, but there's a connection
stay rational
between
longer than stay solvent.
Thank you. And it's true because you just don't know. The market can behave very irrationally, and we don't know. I look at now. Like I remember years ago when everybody thought a company valued at $1 trillion, like that seemed like ludicrous. And now we've got around a dozen companies that are valued, maybe even more, with space, because SpaceX added another one. And we've got companies that are 5 trillion and 3 trillion. Like that whole thing has just been blown out of the water. So we don't know. Like that's the big thing about all this. There's no way that we can know. I mean, when clients or anybody, even when I used to be an analyst, and I get asked, like, when it comes to forecasting, I have this crystal ball, but the problem with it is it's broken. It's cracked and it's cloudy, so it doesn't tell me a whole lot because I don't place any confidence in my ability to successfully forecast the markets. And anybody that does, I think they're just overly confident in something that they can't do.
Yeah, I would agree with that. I think it's hard because, this is nothing new and certainly is always the case. But when you're thinking about your portfolio, you're thinking, oh my God, everyone else is having so much success and I'm not. No, they're not. It's like gamblers who come in and say, hey, I bought this stock and it went up like 500% and it's great. Okay, is that your whole portfolio? Probably not. And if it is, you shouldn't listen to that person first
Exactly.
of all, right? If you have all your money in NVIDIA and like 100% of your money, you either have no money or you're not worth listening to by anybody. It's like the gambler that goes to the casino and be like, oh, I won $500. I'm like, how much did you lose? Well, I won $5,000. I lost $5,000. Okay. So you won a hand, you won 500. That's great. You still came out of the loss. People never tell you the whole story. But you get this FOMO of, oh my God, I'm missing out all these gains. No, it's, when the real estate bubble hit, a lot of people are like, oh, I should buy real estate. No, you don't have to buy real estate. There's plenty of things you could do. Why would you do that? Right? If you're not a real estate investor, you've never been a real estate investor, and now you want to be a real estate investor, you want to do fix and flips like everybody else. No, stay in your lane, right? Like I deal with real estate all the time. I have a lot of clients in real estate. We do a lot with private mortgages. We have a lot of investors. We know we have real estate coming out of our ears. I don't invest in real estate. I don't. I love real estate. I think it's one of the best asset classes around for so many reasons. I don't invest in it. Why? Because I'm staying in my lane. I mean, we do private mortgages and that's fine, but that's my way of investing in real estate without the fixing the toilets, basically. And I don't want to be a landlord. That's not my job. I don't have time for that. I don't have time to deal with tenants. I have clients. I deal with tenants. Like that's ridiculous. So, do I get FOMO sometimes? Yeah, absolutely. I do. I get FOMO, but I'm still not going to do it because I'm smart enough to realize I'm going to stay in my lane, right? I mean, this chart here I'm sharing with you, this is like basically the performance of last week. Last week, what did well? Technology. What didn't do well? Financials, energy, healthcare, consumer defensive, pretty much everything else. Um, I mean, consumer cyclical did well. Communications did okay, although, I mean, basically, if you look at all these sectors, the sectors are broken up into different companies, and you see consumer cyclical, Amazon, Tesla, primarily, and then some other companies, communication services, Google, Meta, and then a bunch of other companies. You got technology, Nvidia, a bunch of basically semi stocks. Then you got software, and you got Microsoft and Apple, but then you got a bunch of other companies. But if you really look at this, it's what makes up most of the index is technology. Even though it's these companies like Google and Amazon, Tesla, are not in the technology sector, they're still technology stocks. So, even though it makes up what, a third, technology makes up about a third of the index. If you include those other stocks that are still technology stocks, it's certainly a lot more. Maybe it's 40%. But either way, my point is when you look at things like this, it should give you pause as to what you think's going on in the markets. Yeah, technology is still doing well. It scares the pants out of me, right? It does. I'm not saying it's bad. I'm just saying, at some point there's going to be a reckoning in the technology sector. There has been. Fortunately, I mean, if you look at software is getting obliterated. Let's see if I can bring up the software sector. I don't think people realize, but basically semiconductors are where it's at. And software, this is not going to be a good one, but I'm going to have to, I'll have to share this. It's going to be quite colorful, but hopefully you guys will get the picture here. So this is a picture of the IGV, or the software sector. So if you look at this, how's it done? Well, actually, what hasn't done well, pretty much April was low, and beginning of the year was right around here. It was around January. So pretty much the markets in technology have not done very well. Yeah, there was a little boost there for a bit, and now it's come back down. Here's something to keep in mind. Here's a little inside baseball for all you podcast listeners. So there's been a trade going on for like the last year, maybe 9 months. And that trade is long semiconductors, meaning you're buying semiconductors, and you're shorting software stocks, meaning that you think they're going to go down. And this is a pairs trade that a lot of institutions have been putting on. And you don't know what institutions are doing, except for the fact that you can follow what the market's doing. Now, I'll kind of share this, and let me actually pull up the semiconductor stocks, just so you can get an idea of what I'm talking about. Also, very colorful, so you'll have to give the image here. But if you look at, let's see, if you look at this is semiconductors. Basically, it just keeps going up, right? Even during the war, it popped down, but basically it was going sideways for a little bit, and it just kind of shot higher. Now, if you compare the two, what you'll notice is that in the last 3 months, when software goes up, semis go down, and when semis go up, software goes down. It's not every day, but there's definitely a correlation there. Anyway, so what I'm saying is, what you can point to is that when you see a pairs trade that everybody's a part of, you start to notice that they go in opposite directions for no reason. Like sometimes there'd be news out, oh, it's bad news for semis, well, software would be up, and vice versa. But in technology, you think the whole technology sector is going up, it's all going down. It doesn't, right? There's correlations. And I've noticed this for definitely the last 6 months this year, but certainly late last year too, is you had this discrepancy between the two. And software has not been doing well because of the AI trade. A lot of people are afraid of AI. A lot of people can't figure it out. They don't know whether it's good or bad. Um, everyone thinks semis are great, and they're going to keep investing in semis. Personally, I love energy. I think we need energy. If you want more semis, what are you going to run it on? Not going to run it on smoke signals. You got to run it on energy. And the best energy there is nuclear. Now, people haven't figured this out yet, but and there's not a lot of ways to play it, but that's the way to play it, right? Is energy. You need more energy. Yeah, you need more semiconductor stocks, but at some point you're going to have way too many and you don't have enough energy to run it on. So yeah, you can keep producing them, go ahead, but we're going to hit a wall at some point and we need to boost the energy. So, I still think energy is a place to be. And energy, I mean nuclear. Not all energy is the place to be, but if you look at the energy that's driving these data centers, you need more of it, and that, in my opinion, is the place to be. But anyway, the point being is, you can see here that clearly people don't like software anymore. There was a big run up. It was a lot of people were shorting it, and this was people getting out of the short. This we call a short squeeze right here. For no apparent reason, it just went through the roof. That's a short squeeze. But then it came back down and people are shorting it again. So this is why we're exercising caution. It's not that we're against these sectors or these stocks or anything like that. It's just you need to have caution. There's not a lot of movement going on. There's a lot of movement going on in the market. There's not a lot of easy trades to make. One of the few easy trades to make, the one that I like best right now. Well, actually, there's two. I'm going to just grab these screenshots and I'm going to share them. There's two trades I like right now. One of them is small cap, and the other is Japan. I think both of those are, if you have to make a low, in my opinion, a low risk bet on areas in the market. And I'm not saying they're low risk. I'm just saying if you had to bet on one, if you said I had to put money in, these are the areas it'd be. This is the Russell 2000 small cap index. That has been doing well. It's been holding its own, and it broke out above this red line, and that's very positive. I won't get into the 20-year and all that, but anyway, this red line is very, very sound point. And so at this point, sky's the limit. There's nothing above it. There's no resistance. We'll see what happens. We're heading into a very big round number, but at this point, that's a very positive place to be. The other one's Japan. I mean, look at this chart in Japan. I like that chart. That is a beautiful chart right there. That's easy money, picking up, just picking up free money. So, with what's going on in the world, international markets are certainly a risk, and Japan being being dependent upon everybody else for their energy, there's a risk there. But of course, they're friends with us, so they're not going to run out of energy because they can always get it from us. But that being said, Japan is one of the few places where there's a lot of positive movement. There's a lot of pent up value in Japan. People have realized it. They're starting to go over there and free up the value. They're starting to talk to them about how they can do that. I think it's one of the few places I look at. And I don't know if you all remember last year, but I was pounding the table early last year about gold. And then in May, I started really pounding the table because it's like, nobody knows this. The mining sector is going through the roof. No one's paying attention. And then towards the end of the year, we saw these crazy prices going through the roof. And of course, we saw it with the blow off at the end of January. But my point is, here's an area that no one's paying attention to. No one's paying attention to Japan. Now, we have this problem with the currency. Big problems with the currency over there. Does that mean you should invest in Japan? I don't know. You should understand how it impacts, their markets. But I feel comfortable with it. I feel comfortable with the markets. I'm not putting all my money there, but I'm certainly putting money there, and we're starting to add more and more as we go, as we get more comfortable with it. But I feel comfortable with this trend. One of the very few in the world that I feel comfortable with. And I'm sharing one ETF, but it's just, you can choose your own. You can pick stocks, whatever you want to do. But I think what's important is Japan has a lot of potential pent up value there. A lot of people like South Korea right now. I don't understand the South Korea trade, so I'm not touching it. It's just way too volatile right now, and frankly, with
Semiconductors.
the war's over.
South Korea's semiconductors. That's what's driving it.
I mean, yeah, it's pretty much
Yeah,
semi.
because Taiwan Semi is in. Well, that's Taiwan, but semiconductors, Samsung, and all that. That's what's driving South Korea.
Is it okay?
Yeah.
Yeah, I just don't follow because I don't care. I don't when I see stuff like that. When I see quote unquote emerging markets, I don't know if it's really emerging market, but technically it is. You see the emerging markets when you have no access to energy and it's really overexpensive and you're having quarantines or not quarantines, you're restricting energy usage to people. That's not a good sign, and the markets are at all-time highs. I just don't trust that, and I'm just staying on the sidelines. Now, does that mean the war is going to clear it up? I don't know. The war's ended 30 times in the last few months, and they said it's over, but we have an MOU. But what does that mean? It means we're going to have we're having a conversation about having a conversation. It's like, okay. I don't know. What are your thoughts, Phil? What do you like in these markets?
So I do want to go back to software for a second because I think this is really interesting, and I made a chart here. I don't know if I can share it or not, but
You can.
okay. So let me try and do that.
Here,
So,
yeah, just share it, and you got to share your screen.
Yeah, one sec.
I'll add you in. Okay.
So what I was doing here is IGV I use to represent the tech software sector. And there's one, with the exception, I picked up 4 stocks that I know off the top of my head that are cybersecurity related. And what's interesting is, with the exception of one, the other 3 have soundly outperformed. Because one thing I think that I felt when this first happened, like at first they just kind of threw all software stocks out because of AI. Because there was even talk that AI could protect you from a cybersecurity perspective. And I had a tough time understanding why companies would say, okay, we're going to let AI be the one that's going to protect us against hacking and phishing and all these other threats. And so if you look, this is a 6-month chart that I have here. 3 of these 4 stocks have done really, really well over the last 6 months because that's the one area within software that's actually doing pretty well right now. Because, look, I know I've talked to the firms that I have helping me with my cyber stuff. And they say, like, right now it's so hard because we can have all these different things to protect us. But the bad actors are way ahead of all the tools so that somebody can come out with something. You've got things to protect you, but you have to be so diligent because whatever tools you have to protect you, they're not caught up with what all the bad actors are doing. And so this kind of bears out the idea that within software, there still is one area that's performing really well because it's one area that's going to be really tough, I think, for cyber to do well. And I'm not recommending any of these stocks. And if you look at their performance and their valuation, we go back to that part of the conversation. These stocks could easily all be overvalued in from a traditional perspective. But it's really interesting because we just think about software and it's gotten hit so hard. But there's an area within software that's not getting hit nearly as hard because it's one that it's much harder for for AI to have an impact on.
Yeah, I do find it interesting. There's so many different parts of software, and let me see if I can bring this back up. We can share the different. All right, here we go. So if you look at the technology sector, right? There's software, consumer electronics. I can't even read all this stuff. Semi equipment. Computer hardware, software apps, communications. I don't see the. Well, anyway, there's a lot of subsectors in there. I can't read them because of the coloring. But yeah, I mean, if you look at sectors like that, I think there's a lot of. I think one of the biggest challenges right now, there's a lot of unknowns. People know that AI is not going away. Although I've had a lot of conversations with people. Had some this weekend too, about AI. But I think one of the interesting things is last week, so Anthropic has been battling with the government, and scaring people with their announcements. Oh my God, people can hack through with this software. We can't release it. I think that's marketing, frankly. I think they're great marketers. They scare everybody with their upgraded models. Oh my God, it's going to be dangerous. Oh, I want that. It's dangerous. I want it. Like they're great marketers. Is it really dangerous? I don't know, but I think they're doing a great job. Every time they have a release, they scare the pants out of everybody about how this is going to end the world. But yet they just released it, so it's not that dangerous. But I think the challenge is, I mean, right now they're fighting with the government, and the government says you can't export Mythos or Fable 5, and it's like, you're going public in the next few weeks. Why would you be battling over with the government? Like, what are you, dumb? Like, wait till after it goes public. I mean, you literally have weeks to go, and I don't know. I get what they're doing, and in some ways, I support what they're doing. They shouldn't be giving the government unfettered access to this. They shouldn't be, if they have a really good model, they shouldn't be just giving it to everybody. But that goes back to the old, not current, but the old Google phrase of "do no evil," right, or whatever it was. It was "don't do evil." My understanding was Google had all this AI technology like a long time ago, and they just didn't feel comfortable releasing it, so they didn't. They used to claim, "Oh, we have AI," like 15 years ago or whatever it was, and everybody's like, "Okay, whatever," but they never released it, and then they were behind because they didn't release it in time. So I think there's a lot of, there's a lot of cloak and dagger with this AI stuff. I don't completely believe what we're being fed in terms of its use case. I do think it has uses. It's great for analysis. It's great for research. But here's a conversation I had over the weekend about AI. If you think about doing research, right? So let's say I'm a kid and I'm doing a research paper for school, right? So I don't have a lot of background information on this topic, whatever it is, right? Let's say the history of the Civil War. I don't have a lot of background information. So I have AI do it for me. I didn't do the work. I didn't do the hard work of research. So I never learned the information because I never had to research. I never had to put any time in to do the work. So I didn't learn it. I didn't earn it, is probably the better way to put it. I didn't earn the information. So I don't understand it. So AI just feeds this to me, and it's like, okay, great. And because it feeds it to me, I don't have the understanding to critically think through, is this accurate? Is this an opinion? What are both sides? Because I haven't read anything. I just got one opinion. You ask it, well, what do you think of this? Is it true? Well, some people say yes, some people say no. Well, that's not an answer either. And, I'm not being overly critical of AI. I'm just saying when you give up the right to earn the information, you give up the right to understand it. And I think that's the biggest challenge with AI is it does some great things. I have it working on some projects for me right now, and it's doing great stuff. But I've earned the information, right? I'm asking it to collate the information for me. I'm asking it to put together frameworks and other things that can help save me time. But I earn the information. I understand it. And I think the challenge is when people start to not earn the information and they start to be lazy and let AI do it for you, you start to get a mediocre result. And we're not at the point where AI is just smart enough to do all this stuff. I think you still have to, earn the information yourself if you want to understand it. And I do think we're going to hit a wall at some point with the AI trend. I don't know when it is. I mean, with the rate the government's going, the government is supporting AI and its growth because we're afraid of China. And I don't know how long that continues. I mean, there is an amount of money that is enough. We're like, all right, this is enough. I don't know when that is though. And I think that's the biggest challenge. If you think of the end of the internet bubble with Global Crossing and a bunch of other companies that were just spending like drunken sailors, at some point, people are just like, okay, that's enough. And then the trade falls apart. I don't know when that is. Maybe it's 3-4 years from now. I don't know. But regardless, you should be aware of it. And that's why if you're investing, you should have 1 foot in and 1 foot out. You should not be putting, put all your chips on the table on this AI trade, because at any point in time, it could go the other way and you're going to be toast. So participate, do your stuff, but just be careful. What do you think, Phil?
I mean, AI is really interesting from an investment perspective too, because you talk about all the money. And you mentioned Global Crossing, those companies. Like, what is one of the things that happened when we had the tech bubble was that you had a lot of vendor financing going on near the end of the bubble, where these tech companies like Cisco and Lucent, which is no longer even in existence, and Nortel, again, which also is no longer even in existence, but they were taking their routers and the other equipment that they had, and they were selling it to these startup companies, but they were financing it so that they had to be able to pay them back. And as that thing started to fall apart, they didn't get paid. And like Cisco had a big inventory write off. There were lots of things that happened back then. And now you have, instead of vendor financing, you have a lot of these companies that are exchanging their product for stock. It's financing by a different name. And so I worry about that. And the other thing that's really interesting, if you look at it, is like we had all these companies like Google and Microsoft. They were software companies, basically, with very low capital expenditures. Facebook is another one, like all the Mag 7 companies, basically. It's with the exception of Apple, because they've been a little bit different in how they dealt with some of this, because they haven't really done their own AI the same as some of the other companies have. But they were all thought to be very asset light. And now they're spending hundreds of billions of dollars on this AI buildup with the hope and the belief that it's going to lead to something someday, but we don't know. But it's changed the whole investing profile of these companies, because there's something called free cash flow, which from a value investing perspective, you like companies that generate free cash flow, which is basically if you take net income and you make adjustments for non-cash items, gives you what's called cash flow from operations on the cash flow statement. And then you add back, then you take away capital expenditures, and that leaves you with free cash flow. And all these companies were free cash flow positive for years and years and years. And now all of a sudden they're not. Google recently said that they were selling $80 billion of stock because they didn't want to just issue debt to finance all this stuff. So that the investment profile of these companies are changing. It's a really interesting concept to think about, is how these companies are changing their nature and their character as an investment, because they went from these things that generated gobs and gobs of cash to now they need cash. And so they have more debt, or they're, like I said, maybe they're issuing stock. There's lots of things going on out there. And again, I'm not saying that makes any of these a good or bad investment, but it's just, you have to understand that their profile has changed. They're not the same as they were, because the environment in which they're working is changing, because they feel that they have to continue to invest in AI to keep up, because it's something that's on everybody's mind. I mean, I said it earlier, we went to this celebration of life in Toronto, and one of my brother-in-laws, he brought their dog with them, and his wife flew, and he and his daughter drove up, and they sent her this thing, and they had AI generated like of their dog with like a prison hat on and all this stuff, and said that they confiscated her food and that she was in trouble. I mean, it was only a joke, but like that's the kind of things that AI can do. I mean, I went to the Berkshire Hathaway meeting, and they had an AI version of Buffett ask a question just to show you the kind of fakes that you can have. So you just have to be careful. It's a very interesting time. It is changing. There's a lot of efficiencies that can happen. You have to understand that AI makes mistakes, but just from an investment perspective, I think it's changed the landscape a lot. We have to be aware of that as we think about investing going forward too.
Here's an interesting thought. I was talking to my father-in-law yesterday, and we were talking about AI, and one of the points he brought up, which I've heard this before, but I didn't really sit with it until we were talking about it, is that a lot of the uses, like right now, these AI companies are spending a lot of money. They're losing money, right? It costs them $1 for a token. I'm making these numbers up because I'm just trying to prove a point. It costs $1 for a token, and they get 20 cents in return from the user. So they're losing money for all this usage. And well, what's the better way to deal with that? They're trying to make it up in volume. You don't lose money and make it up in volume. That's an old joke. But my point is, what they're doing is basically they're losing money, on these tokens. And what's worse, a lot of people are using AI for useless stuff, like what you said, Phil. Like it's fun, but it's not a productive use of this technology, right? You're not using it to make money, right? So when people are, making pictures or making cat pics or they're putting all this stuff online, there's nothing wrong with it. It's fun. You should have fun. But is it progressing society forward for most of that stuff? So it's using a ton of energy. These companies are losing money, and most of this stuff is not productive. So we're basically just lighting money on fire for no apparent reason. Now, I get why we're doing it, right? I'm not oblivious to the fact that we're trying to stay ahead of China and all this. But the reality is that in many ways, this is a complete farce. And I haven't seen any companies that have been able to fire employees and replace them with AI. I haven't seen a lot of companies who are even making a reasonable use of AI. Is there use? Yeah, there's use for it. But is it something you're like, oh, wow, this is great? No, I haven't seen that. And no, maybe it's happening, but I haven't seen a lot of people that are advertising that this is the case. A lot of people are claiming that, but I haven't seen it actually put to work. A lot of the tech companies are saying, "Oh, we're firing people because we're using tech instead. We're using AI instead." No, they're not. I think we talked about this the other week. What a lot of tech companies did in the past is they would overhire because they didn't want their competitors to have these top talents. So they would just hire the best talent out there and they would keep them employed, but they didn't need them. They overhired because if that talent wasn't there, it would go somewhere else. So this is the most monopolistic behavior and shouldn't be allowed, but that's what happened. So they were all overpaying and they made so much money they could afford to do it, to keep these people on the payroll and just keep paying them. And they didn't care because they were making so much money. There was so much profit to go around, it didn't matter. And now they're laying a lot of them off because they don't need them and because the environment's changed. So if that's the case, is it really AI or is it just a change in culture and dynamics of the industry? But they're claiming it's AI. Now, all this to say, we're not raining on AI's parade. We're just saying this is how I'm seeing it. This is why I'm so skeptical of it. I'm not saying it's not great. I'm not saying it's not helpful. I'm just saying that if you really kind of look through it logically, we're burning a lot of energy to do useless stuff. There's a huge consumption of energy, and it's not productive. Like, it's not like it's changing the world and it's launching spaceships to Mars and we have free clean energy because of it. No, you're doing cat pictures. And so this big race for chips and energy and data centers is so people can have more cat pictures. I don't know. To me, it's a head scratcher. I did want to share one more chart before we wrap it up here, and you never guess what chart this is because no one's talking about it. It's the dollar. Remember earlier this year? I remember because I get a lot of these calls when everyone thought the dollar was going to break down and was going to go to zero, and oh my God, it's going to be the end of the world. The dollar, the dollar, the dollar. Everybody was claiming. I literally had clients calling me saying, "Should we get out of the dollar?" How you do that? You live here. You can't get out of the dollar. Like, you can't. Sorry. Too late. No, in all seriousness, I had some people going to Europe and other places, and they're like, should I get out of the dollar? Should I get into the currencies? Like, is it going to go down? I'm like, I don't think so. We can't afford to let that happen, and what happened? Well, the dollar went up with the war, and then it's come down, and now it's broken out. It's broken. At this point, if it stays here and goes higher, it means the dollar is actually getting stronger, not weaker. It is what it is. But I could tell you that I heard nothing but the last 6 months, the dollar's going to crash, it's going down, it's going lower. That's not what the price is telling me. The price tells me it's going higher. Now, I don't know if it's going to continue on this path, but it's certainly it's above the upper end of the range. So I wouldn't be betting it's going lower at this point. I would either be in it or I'd be out of it. But either way, my point is anytime the consensus is it's going in one direction, it's not necessarily the case. Let me share another one, which, and I'll give it back to Phil to wrap it up here. Here's another one that people are probably not aware of. a lot of people, including myself, I didn't realize this because I wasn't paying close attention last week. But if you look at treasuries, a lot of people are. Let's see if we can pull it up here. Here we go. Treasuries. So if you look at the bond yields have basically been going up until in the last month. And in the last month, bond yields have dropped this is the 30-year, the TLT. So it broke down below, right down here is a serious breakdown that concerned a lot of people, and then it kind of broke back up, and now it's continuing to go up. Interesting. That's all I got to say is, isn't that interesting? Because the fact that it's going higher and no one's talking about it is an interesting sign that says, maybe I should be paying attention to this. And I don't know if it's going to continue on that path. It looks like today it's certainly not, and it's back down to that kind of red line. But it's something I would be watching. I'd be watching for a breakout. I'd be watching for trends in a different direction. It really is going to take the end of the war for yields to go down. I think right now they're kind of stuck at this level because the government can't let rates go higher. They can't afford it. So they're going to do things to make sure that rates stay contained. But when the war ends, I do think yields are going to go higher, and I think that is a trend I would sit on. But I think in the meantime, it's probably going nowhere for a little bit. That if I was to bet, I would bet that it's probably going to go up and down, but probably sideways quite a bit. So anyway, I wanted to share those final charts just because no one's talking about them, and it's an interesting change in trend. Final thoughts from you, Phil, before we wrap it up here.
So it was just interesting you mentioned the dollar. And so, as I said, we were in Toronto for the weekend, and I was shocked at how low the Canadian dollar is relative to the US dollar. I didn't believe it. And then on AI, like one place that I have seen, not that I've seen the effect yet, but where there could be a loss of jobs. So occasionally I prepare client tax returns. Not very often because I really would much rather do tax planning. There's always a special reason I do a tax return. But I use this software, and every once in a while I have a technical support question. And there's been a few instances where the default is to call tech support. And they're taking so long to answer, and I'm getting frustrated that I go into AI and I put the name of the software vendor and I put the issue that I have and I put what I'm trying to do. And AI tells me to do it. And then by the time the person says, maybe I have an answer, I'm still looking, I'm like, it's okay, I don't need you anymore because AI told me what to do and it was right. So like that is an area, and I did hear a presentation where somebody talked about that and say it may not be a job loss because what it does is it frees up the people that are doing some of those more simple things to do more complex, right? That the software that AI can't necessarily do. So you may not have a job loss, but I just think that that's really interesting. If you're using software and you have an issue with using it, trying to accomplish something you don't know how, instead of calling tech support, try AI. In general, we've talked about a lot of different things today. As far as the market goes, it seems like it's at a high level, but it can stay at this level for a lot longer without any of us realizing when that's going to change. I like to stay focused on the long term, so I don't like to make movements in my changes in portfolios just because I think that the market might go down at some point in the future. I take the view that when we start investing, we're making an implicit assumption that the market's going up long term. And as long as that's the case, we don't really want to start to try and time the market because then we have to make too many different decisions. And the more decisions we have to make, the greater the chance there is that we make a bad one. As for me, I know experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. You can visit our website at apprisewealth.com. That's APPRISE wealth.com to read and sign up for our weekly blog. Thanks for having me on today, Kirk. Enjoy the conversation.
Yeah, thanks for coming on, Phil. And that's the show for this week. Thanks again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app of your choosing. You can also check out our show at moneytreepodcast.com. On our website, you'll have access to the show notes, resources, and our archive shows. Check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a share rating and comment on the podcast app of your choice. Don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling you products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send an email, express your feelings. If you're seeking financial advice, talk to an oracle or fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything, but I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest